crypto currently has 150 million users. The adoption rate is 113% a year. So it's basically twice as fast as the fastest adoption of any technology in all recorded history. So it's happening at lightning pace. Everybody is coming into the space, the institutions, the sovereign wealth funds, retail investors from ETFs, nation states, everybody. So I do think the price continues to spike significantly, not only into the year end, but probably into the first half of next year too.
Right, now let's get to the dangers of ETFs, exchange-traded funds, which allow people, pension funds, all sorts of different normal financial vehicles to invest in it. How dangerous is it that exchange-traded funds are involved in cryptocurrency, which is seen by idealists as breaking the power of central banks, given that they're betting on the future price? You might have to explain. I mean, what are they exactly doing?
It's a bit complicated. At top level, I don't mind. It's adoption. It's still adoption. It's not in the way that the idealist would believe, which is not your keys, not your coins. I store them yourself, much like you do with gold bars. But it allows people access to this revolutionary technology and the returns that can come from it. The problem is it was done suboptimally. It was actually benchmarked against a futures contract. So a futures contract is something that is about the future price of an asset, and it doesn't have to stay in line with the actual price of Bitcoin. And what happens is when you get a lot of demand for the futures contracts, it trades at a huge premium, which means that you're actually lowering your return. So a lot of people are going to come here and see, oh, well, Bitcoin was up 100% in the last quarter, and they'll suddenly see that they made 30%. It's the same with the USO oil ETF. It's based on futures contracts. So it doesn't actually represent the underlying. So people, even the SEC is saying they're trying to help people here. They're actually not. They're actually doing the opposite. They're exposing them to a risk that they don't understand, which is the premium and discount that futures contracts can trade at. They don't allow ordinary people to trade futures contracts, but they think it's okay to allow them to trade an ETF based on futures contracts. It's nonsense to me.
There's no conspiracy here in a deliberate attempt by the Security and Exchange Commission, which would deny that there's anything dangerous. And I should say they haven't adjudicated on this precisely yet. There's nothing conspiratorial about deliberately creating some kind of financial vehicle which will burn people, make them stop being interested in crypto.
Obviously, the cynic in all of us would say they're probably aware of some of that. They know it's suboptimal. But I also understand the fact that the current system, the SEC and others don't know how to deal with the physical ownership part of Bitcoin for the ETF. Is that secure enough? Because what would be even worse is if they can't make it secure enough, and I think it is secure, but it's a false narrative, and that money got hacked, then suddenly there'll be no money left and everybody could lose everything. I think that's entirely wrong, because there's very, very few hacks of any of the major exchanges. Everything has changed. This is not 2017 anymore, or Mt. Gox 2013. But part of me would say, yes, they kind of understand that people are going to get disappointed, but I don't think they're that Machiavellian.
We can trust the SEC. That's a stop press. Raoul Powell says we can trust them. Actually, let's talk about the SEC, which of course denies all wrongdoing. Gary Gensler, who runs it, has warned that crypto is like the Wild West. I mean, unwittingly, that may attract people in Middle America to it, but there's something political here about statements coming from him and others warning people against spot trading, clearly, or spot investments that you can do on the internet easily.
Part of it is he's in his own political battle to who regulates this. So what he's doing is shaking the saber, saying, somebody needs to regulate this and it's going to be me. At the same time, the CFTC are trying to do the same. The Fed are looking at other ways of regulating, the OCC. So all of these agencies are fighting who's going to regulate it. Why? Because they know it's big and it's power. So whoever gets it gets all the power. So I think that's fair. I think they're also looking at this with the eyes of a 1934 securities law, which is nonsense. What this really is real-time venture capitalism for the everyday person. The everyday person has been shut out of the big opportunities because you have to be accredited. You need to go through a financial institution. There's barrier after barrier after barrier, so only the rich people get access.